Good morning. Good morning. Not financial advice, just for entertainment, right? How I think about stuff, yada yada yada, etc. Okay, all right, got that out of the way. This is LUMN Technologies. It used to do a lot better than it is now. Today was earnings, but I have some shares in it, so I decided to place some options on the hope that there'd be some good news, and I wanted to show you how I managed my trade. Granted, it wasn't for a lot of money, not life-changing money, but I consider what I did a win. Do I always win? No, of course not. I did a bad trade on Starbucks after earnings. I did a bad trade on Intel after it collapsed, thinking it was going to be a bounce. I've made bad trades. I'll show those too, but they're not too exciting. It just shows me losing money. And so what I did was the other day on February 2nd, this was last week. Yeah, I bought um, 5 calls for $3 each. The $1.50 call expiring February 9th, right? In a couple of days. And then on Monday, I when it rose in value, went from $3 to $5 each per contract. I'd sold three of them. I sold three of them so I could at least take back my investment so that I was safe. And then the next day, woke up, um, hadn't reported yet because I think it reported today, but it was gaining momentum, which is what happens sometimes in a lot of these earnings plays. Not always, right? Don't trust what I'm saying, but if you look at it over time, um, more often than not, if people think there's going to be some good news a few days before, a stock will start picking up some momentum, right? The options will start picking up some momentum, and the implied volatility may start to increase. And so I decided to take sell one for $10 profit, and then later that day, because this was yesterday, yeah, this is yesterday, I had to go do something, and so I just sold off the other one for $12. So my original $15 investment ended up making me $22. This was over less than a week of time, right? Look at me, I'm an amazing trader. No, I'm not. Definitely not. Um, Now this is so it was a good day today. Look, I mean, the stock had good news. It's up about 16%, right? It's fantastic news. Look at that. That's fantastic, right? It's great for this is a company that some people thought was going to go to bankruptcy, but the news is good. Stock jumped. If I had held on yesterday till the end of the day, I could have got another $4. I could have got extra $4 for the last call that I was holding, but I was kind of done paying attention to it. And even though the news was fantastic, and even though this $1.50 call was right near the current price, look where it is now. Look how just, the IV faded off, right? The implied volatility faded off because it was a binary event. The news is out, right? The outlook has been discussed. And just look how this call took it. And so this is why people always say sell before earnings, right? At least your calls or your options or your puts, whatever you're doing. And if you really believe in the stock that you're going that you're trading is going to pop, well, you could have converted it into shares, right? I could have taken my $22 of profit. I could have bought probably close to 20 shares yesterday, and then those with the $20, and then today I would have made an extra $3 with this share appreciation or something like that. I mean, on nominal terms, right, it's maybe not a lot of money. On the percentage terms, it's pretty good, but for most people, if you're watching my channel, you're learning like I'm learning. You're not some pro. Because if you are, you're watching my channel, I think you're just wasting time. But for others like us, the goal is just to learn the process so that we get better and better at it, right? The goal is to preserve your capital so that you have more money to trade with. Um, People that were gambling on this, they lost money. Like there was no way out, right? The news came out when the market opened. You already gone. You already lost $10, right? From 16 to just. There's just no way out of it. I mean, okay, I don't have information for the first 6 minutes, so hold on a second. Let's see. Okay, I bet like the first 10 minutes, but look, um, you can see, so this morning the high was $15 or 15 cents per share, $15 for the contract. So you're down $1 from yesterday already. At the open, at the highest point today, you were already down $1 if you were sitting in this call, right? Previous close, 16, high. That's all. That's all I wanted to say is that, yeah, it's very exciting to play options. Very exciting. So exciting. However, you got to know when to get out. You got to know when to take your profit. Anyway, I'm beating a dead horse, but there it is. Anyway, none of this is financial advice, just entertainment, right? Actually, deep down inside, I'm hoping people can learn something. That's all. Really, that's my goal. Because I've spent more time, making this video than the $20 warrants, but I wanted to help people out. Anyway, none of this is financial advice. Trade at your own risk. Take profits.